Hello, everyone. I have the privilege of speaking with Mr. Michael Edwards, who happens to be the co-founder of TTG and is also the head trader at TTG, True Trading Group, for everyone who hasn't heard about it. If you're curious, links are in the description below. But before we get into what he's doing now, I want to talk with Mike because he's a successful trader with a very interesting story that I think a lot of us will be able to resonate with. That's the entire plan. So sit back, enjoy. I really think you're going to have a good time listening to Mike's story, process, and what he's actively interested in the market these days. Mike, how are you doing?
I'm good, man. Great to be here. Thanks for having me.
I think what we're about to get into will be very enlightening to many people because as you and I have talked before this many times, I think your story is a story that a lot of people are going to be like, hey, I see myself in that because you go through a lot of struggles that a lot of traders do, myself included. And I think with that, especially with your presence on social media, with True Trading Group, I think a lot of people see you now. They almost see you kind of like the after transformation photo of like, oh, okay. Like I see that all the time with like, I guess like gym pictures and videos of like, you see the people who are ripped and looking good. And that's years and years of experience and practice and just honing the craft, doing it over and over again. But that's kind of tough to relate to. I think really my interest in speaking with you right now is to understand that actual whole journey. So that's what I want to get into. And I guess the best way to get going is, how did you even first become interested in trading? Like, was it a parent, a grandparent? Was it in high school? Like, where was your trading career? Like, what was the birth of it?
For me, it really kind of started in college. When I was in college, I originally was an accounting major and I hated it. Like I would debits and credits and all that. And I'm just like, man, this is so boring. It's like, I never wanted to do the homework and I wasn't getting the best of grades. But then part of the general business courses that I had to take, I ended up taking a portfolio management course. And the portfolio management course was my very first real experience with the markets and understanding asset allocation and risk management and all of these different types of processes that you go through and to manage a portfolio. And I just right away, I found myself actually wanting to do the homework assignments because I was interested in the material versus the other accounting stuff where it was just like, whatever, it is what it is. When the test comes, if I bomb, I don't really care. And that was kind of the sign for me. And then I switched. Then the very next semester, I switched to a finance major. And then I went and started taking a lot of finance courses and a lot of econ courses to kind of get myself more familiar with overall markets. That's really where my interest kind of started.
I want to get into that a bit more because I didn't study finance myself, but a lot of my friends who are active traders now but studied finance, it was a lot more of that investing long-term portfolios. And as we'll get into later, you're more of, I would consider an active trader, day trader, swing trader now, which really isn't taught. So that particular skill set, obviously, so in college, you learned about the markets, trading, this, that, the other thing. So what led you actually to Wall Street? Like when did you start actively trading?
So once I graduated college, and you're right, they don't teach you anything about day trading, swing trading, like the active trading side. There is no course for, at least from where I went to school. I don't know anybody else that's ever gone through a course like that in college. For me in college, it was more of the economics and understanding how markets work together, market dynamics, and what the relationship between treasury yields and oil prices and technology stocks and PE ratios and like understanding all of those components. It was more like broader market understandings. And then I knew that, okay, in the world of finance, when you think about, well, okay, what's the career path that I want to go down? If you think finance, the best avenues are hedge fund, investment bank, private equity. Like that's the area that everybody wants to get into. It's where the most amount of money could be made. And I went the hedge fund route and I applied to like 25 different hedge funds out of college. I only heard back from a handful of them. I can count on one hand how many actually responded to me. And then I ended up getting hired at P3 Alpha Fund in New York City, my first job right out of college as an equities trader for them. And that is really where I learned the active side of trading, because you're really not taught in. Before they actually let me even touch $1 of their money, I had to go through their training program, and they set up a class. It's like a classroom style setting, and different traders and analysts from the firm would come in and they would teach you, and they would teach you all of these different processes. And that's where I really learned how to become a trader. I was taught, fortunately, in the very beginning, early on, before I created any bad habits, I was taught by other professionals.
I'm so curious. So if they had to basically give you a whole second round of schooling, but obviously with your finance background, what were the interviews like? Because they know they're already having to reteach you a whole new skill set. So is the interview more of a social one of like, do we think you are teachable? Do we like hanging out with you? Do we want to mentor you? Or are they actually asking you about like the Fed, PE ratios, and that type of fundamental stuff?
They didn't ask me anything about fundamentals. Nothing. Like the interview was really more geared towards how does this person think? Because they want a certain type of think, like they want the type of person that has a particular thought process. And a lot of it, like they asked me a question, they want to know like if I played poker and if I was like good at poker, because a lot of when you're dealing with poker, in order to be a good poker player, you have to have good risk management. Right. You got to have good risk management, and you have to have an understanding of probability. Right. Like that's what makes a good poker player a good poker player. And trading is a lot like that. Like trading is not predicting the future. Trading is about understanding probability of setup in the market and just putting yourself on the side of probability over and over again with good risk management. And that's exactly what poker is. So they talked to me a little bit about that. But then they asked me a lot of like brain teaser questions. Like there was one question, I actually put it up on my Twitter. I have to go back and find the exact question that they were asked, but it was three men. They all have different color hats on, or two guys have on a white hat. One guy has on a black hat, and person number 3 can see person 2 and 1, and person number 2 can only see person 1, and person number 1 is staring at a brick wall. Right. And they ask everybody, call out the color of your hat. Who answers the question and who gets it correct?
Okay.
And
so
and I had to,
yeah.
Right. It's like a brain teaser type of question. And I'm sitting there and I'm like thinking about the question. I'm thinking inside to myself. And I'm like, oh man, I don't want to get this answer wrong. And the guy stops me right away and goes, think out loud. He goes, what means more to me is not whether or not you get this answer correct. What means more to me is how your brain tries to come to the conclusion. And I went through it, and I was actually able to get the answer correct. Right. I was able to get the answer correct. And the answer is the person in the middle. And the reason why it's person number 2 in the middle, because if someone says, okay, everybody, call out the color of your hat. If person number 3 does not answer, then that means he sees a black and a white hat.
Yeah, that makes sense. So, and to connect that to poker, it's all about what information do you have in front of you and what can you extrapolate out reasonably. And in that one, obviously, that person's deducing it. Poker, it makes sense that they have all these puzzles. So there you are. Yeah. They set you up to realize that your brain works in a certain way that I'm assuming they want to mold. And then how long was their process? Like, were you coming in a normal 9 to 5 and it was just all day lecturing and teaching and live examples? Is that what your life was?
For about 3 months.
Okay.
So basically what they did was they hired a class of like maybe 20 or 25 people. And then depending on how you did during the training, they would keep you or let you go.
Oh, so it's kind of competitive almost.
Yes. It absolutely was. It was absolutely competitive. And just like I always tell traders when you're first getting started, they actually put me on a simulator. Like towards the end of the training program, I actually was trading fake money, real time data, but fake money just to go through flows and everything. And it was one hell of an experience. And I fell in love instantly.
That's awesome. So when you successfully passed that, so you did all the teaching, you did sim accounts, I'm sure they made you get to a certain tranche with fake money to show that you were there, but obviously the emotions of real money is a little different. So it sounds like they're progressively like almost stone stepping you closer to where they want you to be. So you get on the other side of all that. What is the account size that they even start you with? Were you starting with like 25K? Were you starting with 2.5 million?
Millions.
Oh, you start with millions.
Yeah.
The
fund had liquid assets of just under 500 million.
Okay.
And then obviously there's margin on top of that. So, depending on,
so I'm just picturing like in your young 20s, you're now managing millions of dollars. So like, I'm sure you had some amazing days where dopamine was flooded in your brain because you're up huge percentages. And obviously, folks, if you're listening to this, even Mike here, literally a professional trader, I'm sure you had some serious drawdowns too, where you're like, dude, what? And that's the math of it. See, that's the tough thing. And what I don't like necessarily in the social media aspect of retail trading is people act as if there is almost like a holy grail secret code to winning all the time. And there isn't. Like I've read various books, listened to various podcasts, this, that, the other thing. Some of the best traders, they bounce between 40 and 60. Like it's not only the percentage, but it's the size of your winners and the size of your losers. And I'm personally going through this, and it sounds like something that you're a little closer to having mastered, is keep your losers small and let your winners ride and ride and ride. And that sounds so easy. Everyone's like, dude, why? Of course we're doing that. Why are we not? But it's a completely different thing when you're in the game and you actually need to pull that off because no one wants to admit that they're wrong. So on that note, tell us about your journey of trading that big money and like now you're starting to sling like your winners, your losers. How'd that go? Were you crushing it right out of the gate? Are you a modern day Warren Buffett or was it a little bit different?
I did have success pretty early. However, my risk management was horrendous. I was actually always the guy so the senior traders, the senior PMs would actually have one of their computer monitors would be their like the risk parameters of all the traders underneath them. And they were responsible for making sure that nobody went outside their risk thresholds. I was always pushing the envelope of that risk threshold. And I never had a problem having big winners. Like I was able to have big winners, but my losses were also very big. And I was not like, I was a much better trader than what my actual P&L performance was showing because my losses were so large. And I would refuse to admit when I was wrong. I kind of had this sense of the market's wrong, I'm right. It's just, the market's going to realize this, in a couple of minutes or hours or days. And I got myself into positions that I could not get out of without taking a massive hit. And it was one quote that my boss, who was actually one of the partners of the fund, a quote that he said that has stuck with me forever. And it's something that really changed my entire trading career, which is successful traders are more concerned with how much they're going to lose if they're wrong. Struggling traders are more concerned with how much they're going to make if they're right. And if all you think about is how much I'm going to make if I'm right, then those losing trades become very difficult for you to control and keep small. You can't control how much money that you're going to make on a trade, right? If we go ahead and we get long Tesla, we don't know, is Tesla going to go up $10, $20, $50? Like we don't really necessarily know how far the stock is going to go. So we can't control how much we're going to make. But if we buy Tesla and it drops $5 and we get out of the position, we know exactly how much we're going to lose. So focus on what you can control, and being a good trader, being a consistent profitable trader is more about losing the right way than it is winning the right way. And a lot of people don't really understand that. Everybody gets so, fixated with these like huge wins and these huge trades people post on social media. I've been there. I've had the huge trades, but I also have huge losses. And if you want to really become successful, the only way for you to make more money, don't worry about making more money when you're right. The easiest way to make money is lose less when you're wrong. And that change in my trading is what really helped me turn the corner.
Man, it's interesting you bring that up. A similar realization, but for me, it came a completely different way. At the end of the year, I got my tax form and I noticed that, it said total net gains, losses, roughly break even, but it gave me the gross profits and the gross losses. And I think so many times it's pushed to make those gains bigger, bigger, bigger. And I thought to myself, I was like, if I just cut 10% of my losses, you're going to be a very profitable trader. All of a sudden, like change nothing of my winning trades. Let's just focus on keeping a little bit more control on the losses and then boom, very profitable. So folks, if you're listening to this, the next time you're doing your tax forms, don't look at just the net difference. Look at your gross profit, gross losses, and think about it exactly what Mike's saying here of like, whoa. If 90% of your focus is on just risk control, I honestly think your winners might just take care of themselves, but that's just my thoughts. So with this awesome quote that I fully agree with, where did this all happen where you're kind of a gunslinger, we'll say, big wins, big losses? At one day, what, you were getting a cup of coffee with your manager and he said this to you and like the heavens opened above and it was like just that almost like church music of, oh, or like what happened?
I wish it was that happy of a story. It's not. Um, so one day I'm in a position, and I news came out. This is actually their situation was when pretty sure it was with Steve Jobs. This is when Steve Jobs was still around, and there was a rumor that someone said that like, I forgot the rumor. He fainted jogging in Central Park, and this is when like he was first getting sick,
Mm.
and it was like the markets panicked when this news came out, and Apple just tanked, absolutely tanked. And I'm just like stuck in my position, not knowing really what's happening, right? Because it happened so quickly. I'm like, what the hell is going on? And then you hear this and you think, oh my God, did this guy just die? Like, what's going on? Turns out it was a complete false report. If somebody just made it up, it was a complete lie. The markets reacted, and then eventually the markets recovered. But I got caught in that. And I got so angry that I stood up from my trade station. And the way that the trading floor works in the fund, you have it's a like long ways tables, and you have all the traders have all their stations set up. And for me, my boss was really kind of mentoring me and taking me under his wing. So him and I sat face to face, but we can't see each other because all our screens are in the way.
Mm.
But our screens are back to back, so we can communicate. And I can communicate with all the traders around me. So I stand up from my desk, I grab my keyboard, and I just snap it in half. I snapped it in half, like space bar goes flying, letter Q, semicolon. But so I snapped this position, but now I'm still in the position. And now I don't have a keyboard to execute my trade. So now I'm sitting there, I'm like, oh, joke's on me. Now I can't do anything. So I screamed to our tech guy. This guy's name is Ruben, like 6'5", 300-pound dude, big teddy bear, nicest guy you'll ever meet, like just a massive human being. And I scream, I go, Ruben, I need a keyboard. So then Ruben grabs a keyboard, and this 300-pound guy just running down the trading floor. Right, to like hook up my keyboard for me, and I get myself out of my position. And my boss, throughout this whole process, doesn't say a word. As soon as I'm finished and he sees that the position has been exited, he stands up over the computer monitors. He goes, Mike, get off the floor. I was like, kicked me off the floor. I sat in the traders lounge. We had a little traders lounge with PlayStation and massage chair and ping pong and all that stuff. So I sat in there for the remainder of the market hours. Then he came in after the close, and he didn't have to do this. And this is why I really do owe a lot to this guy. And he came in, he sat down, he talked to me for maybe about an hour and a half, and really just made me realize that, telling me that he's like, you have so much potential, but you are standing in the way of your success. He's like, if you do not get your emotions and your risk under control, you're going to fail. So you have to decide, how much does being successful mean to you? Does it mean enough to you for you to change? Does it mean enough to you for you to focus on the things that I am telling you need to do in order to be successful? And I mean, I'm summarizing, but like that conversation, and that's when he told me that quote of the successful traders versus struggling traders. And that is really what got me moving in the right direction. It was a gut check. It was a reality. I was embarrassed in front of everybody, kicked off the floor, and that's what it took, though, for me to make that switch.
That's an awesome story. So I guess from there, it sounds like that was the start of you, I guess, being more consistent in the classic P&L, so being wildly up and down, just more like those consistent gains. And I'm sure even that, it's not like the next day, I'm assuming you came in and all of a sudden it was great. It's still a grind, but it's more of a new framework for your own mindset. So truly appreciate that. But from there, like, were you at this hedge fund now for a couple more years? Did you go to another hedge fund? What's the difference between that conversation and then you starting TTG?
So after the 08-09 situation, we had a lot of fun. About 50% of funds closed up shop, and actually they became just like a prop trading firm after the 2008 and 2009 crash. And I went around and thinking that, okay, well, I can maybe just find another job working at a fund, like at a hedge fund. And it was not as simple as I thought, considering that 50% of all funds had kind of closed up shop, or they restructured and reorganized kind of the way that they do business and the way that they operate. And I went on, I just started trading for myself, like just trading on my own, while I was like, oh, I'll just go and I'll apply for, now I have experience. Like before I was just coming out of college. I received one of the firm's Trader of the Year awards. So like, I was like, I have some stuff on my resume. My resume looks a lot better, so I can go out and get on the job. Was not the case. I'm going for a job at a different hedge fund where somebody else that has 7, 8, 10 years more experience than I did that was going for the same position. It just wasn't working out. So I just continued to just kind of trade on my own. And then I ended up getting linked up with a couple of buddies of mine, and we were, starting some other businesses. But while I was still maintaining and trading on my own, right? Gotcha. I kind of came to the realization, like after about a year and a half to 2 years following the Great Recession and the financial crisis, that I was like, man, I have to start pushing in a different direction, because it's just not, it's been a lot longer than I thought it was going to be for me to just get a different job. And it was not as easy as I'd anticipated. A buddy of mine used to be an investment banker at a boutique firm in New York City, and he lost his job during 08, 09. And same thing with him. He was trying to find another job, couldn't do it. 2 years went by, still nothing. It was pretty brutal back then for Wall Street, unless you knew somebody or you had, a stellar resume and experience, and you were willing to take a pay cut just to get a job. So it was a pretty crappy time during that era. I don't know, if people were around in the markets back then. You had people committing suicide. It was bad. Like once, like Bear Stearns and Lehman Brothers going under, it was a brutal time period. But then I, just kind of got into the entrepreneur realm, and then I got linked up and partnered up with my partner now in True Trading Group, Adam. And we just saw a massive hole in this industry. Like you said before, like there's really nowhere that teaches people any of these skills or any of this knowledge. And I said, well, I have that experience, I have that education, and why don't we then create a product and a platform that actually gives retail a chance? Because you have a lot of these programs out there that they don't actually teach people anything. They don't give them access to any like tools or anything that they actually need to help them become successful. So we just saw that there was a big hole there. And that's how we created True Trading Group. We put all these tools for traders like on one platform. Myself and 9 other professional traders, we all, trade together. People see our screens. They can follow our trades if they want. But while actually getting educated from a professional angle, which is the same level of education that I received when I was working at the fund in New York.
I like that. Essentially like innovation out of necessity. So from the hedge fund to obviously like the lull, like when the markets were bad, to now with TTG, is your trading roughly the same, like between what you personally do now and then what we saw at the hedge fund? Like were both options, or is it both equities? Like is your trading wildly different, or is it very similar and you just like exactly what you do? Or as the markets and the market regimes change, have you adapted your own trading?
So it's similar in the sense that I still am predominantly an equities trader, and I was an equities trader when I was at the fund. I do not predominantly do options. I'll do options here and there if I'm trading like the SPY or one of the indexes, but I mostly trade equities. So that in that sense, it's similar. But when you're looking at like the trading strategies and styles, there are differences, right? When you're trading, completely different types of position sizes like that. I'm not getting into millions of dollars of one position, for myself in, with retail. And there's different, there are little tweaks and little adjustments that you make in trading strategies and trading styles, and like time frames of holds, and different like hedges that you would put on with larger positions. So there are little differences when it comes to the strategies, but I trade equities like I used to.
So with that, whether it's the hedge fund or TTG, obviously you've been trading long enough that you've seen crazy moves, crazy stories. I guess with that in your own trading, do you have something that really sticks with you as like an amazing win, and there's something just insane about it, or maybe unfortunately a large loss that just taught you a big lesson? I know we talked about what was going on with Apple, but more so of maybe it's a recent one or a lesson that a bit more recent, whether positive or negative.
There's a couple trades that really stand out to me in my trading. My biggest loss, definitely, obviously, that stands out to me, I'll never forget it. It was many years. Honestly, I don't remember what year it was. It was probably maybe 10 years ago, maybe at this point. And I was short a stock. They halted the stock, news pending. And I'm like, oh no, this is this good? Is this bad? Like what's the situation here? The company was due out for earnings, and it was Baidu, by the way, and they were due out with earnings. Yeah, I'm pretty sure it was Baidu, and they halted the stock. I'm stuck in my short position, and apparently there was a leak on their earnings, and they halted the stock, came out to release the earnings. Well, they were blowout monster earnings, and the stock reopened for trade with a huge gap up, and I'm like, deer in headlights. Deer in headlights. I totally froze. I had no idea what to do. I'm so far past what my intended stop loss in this position was going to be. I was not anticipating this at all. Never mind the halt, but I wasn't expecting that type of a reaction to the earnings anyway. And I just got absolutely obliterated. And the lesson that taught me was, and still to this day, I do not trade earnings. So I do not get myself into positions going into earnings releases, because the way that I look at it is I have no advantage over another trader. If anything, I'm at a disadvantage because I'm not an analyst. Like, I don't sit there and dive into a company's financial reports. I don't sit there and dive into, like the statistics and details of their business and compare that to their competitors and the industry as a whole. Like, I'm not an analyst. I'm not going to sit there and try to make a call. Yeah, do I have my opinions? Of course. But that does not give me an edge. That's more of a 50-50 coin flip, because you can be right on the earnings, but maybe the company lowers their guidance and the stock goes down anyway, even though they beat earnings. So it's too much of a coin flip for me. If I wanted 50-50 odds, I'd go to Vegas. And what I said in the beginning of this is trading is about probability. Finding the highest probability setups that you could put yourself in. 50-50 is not high probability. I want setups where I have 70-75% probability on something. And those are trades that I attack. So my lesson there was, don't trade earnings. I don't have an edge. Let the earnings come out, digest the information, then place your trade. And that has done me far better over the course of the years than trying to guess, oh, let me go ahead and get long or buy calls or puts or whatever, going into an earnings release and like swing for the fences with a YOLO trade. I've done far better, waiting it out. And that's kind of my lesson there. I'd say my biggest trades, I'd say two really stand out to me. And they were actually both a couple of years ago. You remember when Tilray IPO'd and it squeezed to like 300 or whatever it was? Yeah. I caught the damn near top of that thing short.
Oh.
So it was 2018. And the stock was squeezing like every day. The thing was just on a monster squeeze. And finally, there was one day, it got to like 300. It dropped and halted. And it halted at around like 285 or something like that, if I remember the price. And I sat there and I said, that's the crack. The momentum has cracked. It shifted. It's the first downward halt. The stock's been squeezing for weeks. I'm like, that's it. All the short position is squeezed out of this thing. There is now nobody left to cover their short position, and there's nobody left that's going to buy the stock here. Everyone's going to be taking profit. This thing is toast. I shorted it immediately out of the halt, and the stock just dropped like $150 over the next 2 to 3 days.
Wow, that's awesome.
Yeah, and that was one of my biggest trades that I've made. And then also there was a small cap biotech that was one of my biggest wins, but it wasn't like one trade. I actually got in and out of it like 3 different times, and it was like a huge short squeeze. I think it was BPTH. And then that was a couple of years ago as well, but it went from like $4 or $5 to like 25 or $26. But I caught it like 3 times. So it was like, I wrote it up, pulled back, reloaded, squeezed, pulled back, reloaded, and squeezed again. And I was actually in Vegas trading. I was actually in Vegas trading that stock. I was in my hotel room, and it was, early. It was early because it's 3 hours behind in Vegas. And I once I closed out that position, I went right to the casino and had some fun.
That's awesome. So obviously in those two examples, you have no hesitation. You'll be a bull or a bear. Like you're
Oh
not
yeah.
necessarily like just playing one direction. You're looking for either, I guess, overextensions or whatever. So with that, when you're trading, obviously there's not going to be a general statement of this is how you always trade. But most of the time, are you in and out that day? Are you holding for a couple days, a couple weeks? Like, is there a time frame where you're like, okay, this is my sweet spot?
I'd say I'm predominantly a day trader right now, where I'll be in a position for a few hours, but I also swing trade. I mean, I've been in trades where I'm in for a couple of days, or I'll be in for like 1 or 2 weeks. When it comes to like my active trading, but I would say that the majority of the like individual trades I'll make, the majority of them are day trades, but I also do swing trade.
Now, with that, a lot of the times I've been taught like there's two major methodologies. You're either trend following, like something trending up and you think it'll continue, or in your Tilray example, it seems like an extreme overextension and you're looking for the move to end. Now, with that, do you like one more than the other? Is there like a thing that you're like, oh, I'm always looking for something to be blown out on what MACD, RSI, Keltner channel, or is there like your go-to thing where you feel the most comfortable?
I honestly think I'm a pretty neutral trader.
Okay.
Because and I think that just stems from, because the fund that I worked at, we were a neutral long short equity fund. So there's some hedge funds that have to only be long.
Mhm.
Like you cannot get into short positions like based on like the mandate of the fund. Like you have to be long. We were neutral long short. So we can be long, we can be short. And I think that just learning through that has kind of kept me more balanced. And that's why I have a better time being more consistent, because you'll have some traders that like killed it in 2021, right? Because it was just buy the dip.
Yeah.
But then they got killed in 2022 because they couldn't make that shift to, well, now you got to start shorting the rip, like sell the rip now instead of buy the dip. And a lot of traders will really struggle when the market shifts like that. So they'll do really well during a bull market or really bad during a bear market, or vice versa. You have some people that are just bearish to the short side and they get run over in bull markets. But I think my experience early has helped me keep like a neutral, like unbiased kind of stance. And I really wouldn't say, I would have to go back and look at like my trades, but it doesn't stand out to me whether or not I predominantly trend follow or trend reverse.
Mhm.
I definitely do both. So I really wouldn't say that it's one or the other.
Appreciate you sharing that. Whether it's now with TTG, recent experiences, or maybe when you were in New York trading with the hedge fund, obviously you've had some success. You brought up the fact that you got the award for Trader of the Year at one point. On top of that, though, I'm sure you've had to meet a handful of multimillionaire, if not billionaire traders. When you compare those to maybe students or people in your like just average everyday life, are they truly that different, or are they like the David Goggins discipline, carrying the logs, carrying the ships, or are they just super good at one thing and other than that they're normal people? Would you say they're narcissistic? Are they super nice and generous with their money? How would you characterize some of these people that in a trading perspective like really impressed you?
They're normal people. I haven't, yeah, I mean, I haven't met like any of the like idiot savant, like, super like quant, like all about the data, the numbers, like they have no social skills, but they're just like a human computer. I haven't really met anyone like that. Yeah, I really haven't met anyone like that. I mean, we had one guy, I mean, I guess he wasn't really a trader, but he was our programmer, that was building out our black box, or he was building out our trading algorithm. We call it a black box. And Goldman Sachs actually stole him from us. But I mean, he was really kind of like a brain, but like not a lot of social skills. But the other traders that I've met that I would consider some of the like the best traders I've ever met in my life, normal dudes, like let's go get a beer and watch the game, like just normal. You wouldn't know it. It's like you wouldn't know that I'm standing next to this guy and he's worth like 200 mil. Like you wouldn't. He's just got on like a polo shirt and some jeans and his Rolex watch, and we're watching the Yankee game. Like, I think that what I will say, the common trait amongst all successful traders that I've ever met is two things. no matter what their strategy is, no matter what their style, because there's so many different styles. There's so many that don't ever let someone tell you that this is the only way for you to trade, because there are so many different styles. And when I teach our members, it's not, hey, it's my way or the highway. It's like, I'm going to teach you the proper way to do this, and you can put your own little twist and spin on it based on your personality traits. And I one of the things we do is we try to help people find their trader identity, which is like what strategy is going to be best for you, because people have different personality traits. And your personality traits will actually have a pretty big impact on whether or not a trading strategy is going to be good for you or not. Like if you're someone that just really struggles with making quick decisions, like if you're a very indecisive person, then you're probably not going to want to be that more active, day trading, scalping type of person. You might want to look more towards a swing trading style, because it takes you a much longer period of time to make a decision. That's just a very basic example, but you kind of get where I'm going with that. But some of the traits that I see from successful traders is they are confident and they are disciplined. And if you don't have either one of those traits, you're not going to be successful. You can't lack confidence in your ability, because when you see something, when you see an opportunity in the market, you have to be able to pull the trigger and attack it. If you hesitate, you're going to struggle. You have to be confident in what you are doing. So that's one thing that I see is a common trait amongst all the successful traders. And then discipline. Like you can't let yourself just go on tilt and, do the stuff that I used to do, right? Because that's how your performance will gravely suffer. And that discipline and confidence is what I think is the reoccurring theme that I see from successful traders.
Those are definitely some awesome words of wisdom. I appreciate you sharing that. And in fact, I think that's the perfect place to wrap this up. Folks, if you enjoyed this, obviously all the information for Mike, where you can find him, his Twitter, his website, all that is in the description below. If you want to fire him off some questions, I personally know that they're very reachable. So if you want to follow up, learn a little bit more, all in this description of this video. But Mike, for you, thanks for all sharing your story, for your insights. I'm sure a lot of people listening to this got a lot of just taking this to obviously progress their trading to the next level. So for me and everyone listening, thanks for your time, and hopefully we could do it again soon.
Yeah, man. My pleasure. Thanks a lot for having me. Really enjoyed it. Look forward to talking again soon.
All right. Have a good one. Bye.
Thanks, man.